My name is Jesse Oliveira. I'm an account executive. I've been with the business for over 2 years now, and my expertise lies with the fixed asset accounting module.
Good afternoon. My name is Richard Exley. I'm the APAC Sales Director at MRI Software. I do have a pretty rich history of around 13 years in the fixed asset accounting space, so hence being here today with Jesse.
Awesome. Just to run through today's agenda, we'll start off with MRI Fixed Asset Accounting, a best-in-market solution. We'll move to why MRI Fixed Asset Accounting is better than using a spreadsheet. Then we'll go to MRI Fixed Asset Accounting integration with MRI's GL. We'll close off with some client success stories and question and answers. So to jump into it, MRI Fixed Asset Accounting, a best-in-market solution. So this is a term that Richard and I frequently throw around on demos or chatting to clients on the phone. What we've decided to do today was break up this slogan into 4 reasons why we think our fixed asset accounting module is the best in market at the moment. So we'll start off with the single source of truth. So what does this mean? Essentially, it's the ability to consolidate reports across multiple companies and books into one place. Essentially, purchasing MRI fixed asset accounting will allow you to fully meet your financial reporting and requirements for both real estate and non-real estate clients. Point-in-time reporting, clients who manage multiple companies' reports know it takes several days, 2 weeks to generate consolidated financials, and after all that time, they still struggle to ensure that the maximum allowable tax depreciation is taken to reduce their overall tax obligations. MRI fixed asset accounting enables detailed or summarized reporting to be pulled within seconds and ensures that the appropriate bonus depreciation and deductions are made.
So compliance from a fixed asset accounting perspective is a really hot topic. Certainly a lot of our clients investing in a fixed asset accounting solution, they do so because they need to ensure that they have that regulatory compliance for when they get to their audit at the end of the accounting or the tax year. So from our perspective, ensuring that an MRI fixed asset accounting user has that compliance fallback is really crucial when we're presenting our product to the market. The security angle here is also really important. If you think about the compliance, the tax reporting, the audit trail, and couple that with the strength of MRI's solution broadly, not just in the fixed asset module, but across the platform that we have, and couple those things together, that's a really unique proposition. So we have a lot of clients that have access to the fixed asset capability, knowledge that they're going to comply with their audit, their end-of-year tax reporting needs, and also that their environment, their platform, is a secure one. The other core angle here is to think about the fixed asset life cycle. So from a fixed asset perspective, one of the things that we do, in my opinion, really, really well is we handle the entire asset life cycle, including everything that happens through the asset's life between acquisition and disposal. So if you think about that, what that means is we can capture every event, every financial transaction, every scenario that comes up that needs to be factored in from an audit trail perspective for reporting, but also to account financially and also for tax. So there's a number of different areas there where actually the solution is a differentiator from other products in the marketplace. We handle tax, we handle depreciation, multi-currency we'll get to a little bit later. But handling all of those things across the entire asset life cycle is really crucial. So let's think about what that means. Well, acquisition, the cost of an asset. When we acquire an asset, we want to know that that cost enters the balance sheet at the right point in time and into the right category, the right grouping. When those assets move around your business, we call that a transfer. So whether that's an asset moving from one building to another, from a particular profit center to another, we would transfer the asset across the balance sheet. The crucial point here is that each of these transactions or each of these scenarios comes with an audit trail. So if you think of the need to show an audit team where you transferred assets through the year or how depreciation ended up in one location, whereas previously it was in another, we can show that at a detail asset by asset level. Cost adjustments are also important. If you want to factor in a credit note scenario, if you want to think about a capital improvement that gets embedded with an existing item, for example, an aircon upgrade being added to an existing unit on your portfolio, a cost adjustment enables that. We can create the cost implication of a capital repair without duplicating line items in an asset register. One of the founding principles we try to stick to is the idea that you have a number of assets in your register that represent the number of physical assets within your environment. We also deal with an event that we call a relife. So a relife, from our perspective, is ensuring that the useful economic life of an asset in the system reflects the life of an asset in the real world. If your asset's in poor condition, has been repaired and will last longer, we want your depreciation to reflect that. And so when we get to the end of the asset's life in fixed asset accounting, that should also be the time that the asset's ready to be replaced in the real world. And finally, we look to revaluations. So a revaluation event allows us to keep in touch with market forces. If you think of a land parcel being increased in value over time, no depreciation impact, or maybe a property valuation moving up over the course of time, we want to reflect that, but not just to carry the value, but also to think of the IFRS implications of doing so as well. So the product is compliant in various IFRS and international standards, and certainly around revaluations, this is one of the key areas where we deliver that. The final point, if we want to think of an asset as a quantity item, so it's not just about property, but also equipment, vehicles, fixtures and fittings. If you have those items within your asset register and you have to dispose of a part or move or transfer, cost adjust a part of an existing item, the asset split will give you that capability. And finally, we get to the disposal. What's my profit? What's my loss? When did the asset get disposed of and who did it? The disposal event is designed to capture that information. The expectation is we need this information later to prove the validity of our accounts. So if it's here and it's recorded as part of an event through the asset life cycle, then the outcome will be we can report on it later.
So next up, we've got why it's time to ditch spreadsheets. Whenever I talk to a person that's just inquired into MRI fixed asset accounting, 9 times out of 10, they are still using spreadsheets, hence why they're on the phone with me. What I always tell clients is a good fixed asset management system moves away from spreadsheets and consolidates asset information in a centralized asset register, which is accessible to multiple departments within a company. That can be finance, IT, or maintenance. A system that incorporates asset tracking software will speed up physical audits, which will make it easier to build and maintain a fixed asset register. With a purpose-built system producing accurate depreciation and amortization calculations, reporting and forecasting, maintaining compliance is easy to achieve. There are many compelling reasons why you should move away from spreadsheets, and what we've done is listed the top 7.
So some of the key common challenges that we have, when you inherit a spreadsheet from a colleague, maybe someone who's moved on from the business, and you take on that file, there's an element of assumed knowledge. How do you know that the formulas are correct? How do you know how to operate that file? It's quite tricky, and actually you'll invest a lot of time in making sure that you can operate that file, that system, to the best outcome. And that's wasted time in our view, certainly not time that's spent on other business critical activities. So the assumed knowledge is certainly a component of the issue that we try and resolve by delivering the fixed asset accounting module. It comes with training, it comes with user manuals. It's something that is repeatable and is accessible to lots of different people. So if you walk into an organisation that has a fixed asset register that is supported by another organisation like MRI, there's a chance that you can pick that up quickly and be confident of the robustness of the data that's in that product. And talking about the robustness of the data, inaccuracy of data in spreadsheets is one of the most critical issues that we come up against. So a lot of our clients tell us that, but for the fact that the starting data was wrong, the system would have worked fine. And that's great, but the outcome is not there. So inaccurate data and inaccurate data entry is one of the things that we're really on a campaign to try and stamp out. And I think that also fits with formulas as well. So incomplete formulas, formulas that don't give you the outcome that you need, or formulas that don't look to some of the complexities. For example, IFRS. If a formula doesn't capture it, then the system won't work. And so what we pride ourselves on at MRI in this best-in-market solution is being able to ensure that for the future-proofed aspect of this, the system is updated. Next time the IFRS code is different or gets updated, the system will be modified as well. And the final point with a spreadsheet file, everybody can access pretty much all of the data. So the audit trail is not there. Within fixed asset accounting, if I go and edit a particular entry, my name, my user ID, and the date and time get stamped on the transaction. So that means that next time, even if it's not me who's in the business, someone can come to that data, they can understand what happened, and they can track it back to an individual processing a specific transaction. And it's that kind of audit trail that our clients look for to help them through a year-end audit with their audit team. So from our perspective, tax reporting is one of the most crucial components of this solution. And in order to make it a solution for everybody, for every requirement, for every business, we have to cater for tax. So tax from our perspective is not just about a specific country, it's about the ability to calculate tax depreciation, a different value, a different rate, different depreciation percentages, different starting points across multiple countries, Australia, New Zealand, and into Asia. We can cater for tax depreciation across APAC. We also factor in insurances. So if you think about tax reporting, standard depreciation, all of the other information that goes into making a fixed asset record complete, we also have the prism of insurance that sits off the back of that. So what are your insurance expiries? What's the insured value? Do you have the original documentation? Be it a property, a vehicle, a piece of key, plant or machinery in one of your locations. We want to ensure that you've got a single source of truth to access the information that helps you to either make an insurance claim or keep your records sound through the course of the asset's life. The final point here, I think, again, is compliance. Complying with our requirements to hold good data to get us through audit is crucial. If we have all of this information, if we can recall it when we need it, and if we can show that we're using the system to the best of our ability, by default, we'll comply with the standards that are laid out for fixed asset accounting.
Lack of accounting functionality. You would have seen Richard walk through the asset lifecycle earlier on, and in this slide I'd like to take the opportunity to hone in on a specific piece of functionality I feel MRI fixed asset accounting does better than our competitors as well as spreadsheets, and that's the ability to link parent and child assets. This is essential to establishing an asset hierarchy, and MRI fixed asset accounting displays this pictorially in collapsible branches. A typical example of this would be a building security system, where the system would be noted as the parent and the associated cameras would be noted as the child. The option to transfer or dispose of the child asset will subsequently follow the transfer or the disposal of the parent asset, keeping the relationship intact. So spreadsheets are unable to accommodate the parent-child relationship in this way, making it difficult to accurately track and manage these important dependencies. Their inability to conduct automated asset splits and batch disposals will also cause problems in the future.
So one of the other crucial issues that a lot of our clients have is that they are faced with so many depreciation schedules. A lot of our clients have multiple accounting books for different regions, different countries, different rates, even issued by the ATO. And they have to capture all of those in the same place, but across multiple different accounting books for the same asset. So if you think about the challenge there, in an Excel file, maybe even a competitor product, you have one definition of the asset. You'll have many definitions of the asset's value written down, current depreciated value, and what the depreciation forecast is going to be from here. So that's added a lot of complexity, multiple streams of figures, hinged against one individual asset in an Excel file, and then remember keeping all of that clean and tidy and compliant with an audit trail. That's a real challenge. So what MRI fixed asset accounting allows is a single source of truth, as we've mentioned, but with all of those streams of figures hanging off of an individual asset, but with the control and the security that sits around that. One of the other great aspects of this solution is that we have a lot of clients that operate in multiple countries. So if you think about a client who is headquartered in Australia, but they have property or assets in New Zealand, maybe in Singapore, they'll have to bring the data back to a group currency. So we'll have an Australian dollar core reporting requirement for headquarters across all entities, but we need to carry the asset in New Zealand dollars and in Singapore dollars and then depreciate them locally before we bring them back to a group report. So the system allows for that. We can enter currency conversion rates, and we can have the system bring back to a running Australian dollar rate and provide a group currency file at any point in time. That's whilst maintaining all of the audit trails. And then finally, as I mentioned, going along with all of that is the asset classifications, the names, the important dates, the insurance values. Again, an extra dimension on top of everything we've talked about. It really is a next to impossible challenge to do all of that in an Excel file. And I think just to finish off on this particular slide, it's fair to say that nearly every customer of MRI would have some kind of fixed asset register. So it's very rare for us to see a real scenario where the client doesn't need some element of a fixed asset accounting tool.
Unable to meet historical reporting and forecasting requirements. So composing reports and forecasts can be complicated and a daunting process, especially if attempting this on a spreadsheet. Data produced is far too important to risk inaccuracies. MRI fixed asset accounting will incorporate standard and configurable reporting and forecasting templates to ensure that an intuitive method of extracting and analyzing data is achieved.
And then we move on to the work involved. And so everything that we've talked about so far has encapsulated the challenge that's associated with running a fixed asset solution. But if you think about the effort, the amount of labor, the number of hours that are required to maintain that, that's intense. And so if we're thinking of a month end, quarter end or a year end, there's generally a big spike in the amount of input that's needed to a fixed asset accounting spreadsheet. And then obviously, if we have to repeat any of that for audit, if we have to go back and dig out answers to questions from our audit team, internal or external, then that's a further additional cost in terms of time. So when we think about data that we have to input, maybe from invoices, journals that we want to produce from the system, then we want to make that as seamless and as easy to manage as possible. And certainly the fixed asset accounting module handles journals and journaling data out really, really easily, either directly into the broader MRI solution or into another financial package, depending on the makeup of your business. Obviously, the risk of incorrect data, multiple reporting that we have to then later consolidate, multiple spreadsheet files that we build into a stack of board reports being one example. Those, again, are quite important issues that we want to solve for. We don't want a financial accountant or a finance manager pulling together spreadsheets to present data to the board. That would have been maybe acceptable 10, 15 years ago, but certainly in the age of BI and automation, we don't want that to be the go forward for our fixed asset accounting users.
So now we move on to MRI fixed asset accounting and the integration with MRI GL.
What would the fixed asset accounting solution be without integration to the wider MRI package? And of course, one of the things that MRI is looking to do is to save our users and our clients time and money by providing best of breed software. So in this scenario, we've got integration into the fixed asset package, but also out of the package at the back end of a month or a quarter or a year as well. Think about the asset creation first of all. 3 major areas within MRI where you can actually create an asset, either from an invoice entry, a job cost, or a journal entry that would hit the general ledger and find its way, if coded correctly, into the fixed asset accounting module. So what we do is we introduce the idea of a category, building, land, plant, equipment, something like that, that allows us, once defined in the GL, to create the asset off the back end. So if an asset line or an invoice line gets managed in the GL, but it's got a category of aircon or PP&E, that will get picked up by the fixed asset module and brought in to the asset into the asset system to be managed through the life cycle. And of course, you can see on this slide that we take the asset all the way through its life cycle, as we discussed before. We get to the end of the process, we can do 100% of the reporting that comes with our solution, but then we push the data back into MRI to give us the holistic journal entry that's also important. That might be depreciation, as we've got here, could also be disposals, could also be revaluations, cost adjustments, etc. So a full suite of journals that find their way back to the general ledger.
And in closing, I think it's a good time for Richard and I to share some of our experiences along the way with both customers that make their money through real estate and customers that don't make their money through real estate. So generally what I've noticed during my time in the seat is that it's an exciting opportunity for someone that comes to MRI looking at fixed asset accounting, and I think it's a good time for them to start the whole, consolidating the asset information into one place and actually getting an idea of what they actually have and where it is. Generally, when you're managing that on a spreadsheet or in other systems, it's very difficult to pinpoint where those assets have been for the duration of their life cycle. Another point that I think is really exciting from my experience so far is giving companies that are somewhat decentralized the ability to centralize their financials in one space. And I know that we have achieved some really successful results by doing that.
I think that's a really good point, Jesse. And actually, when you look at the success that we've had with the solution, actually, in the main, that's when we're bringing lots of different files together. So we consolidate, we create a single source of truth, and then we use that data as a go-forward baseline to give us an improved fixed asset accounting solution go forwards. So think about a business that's had a spreadsheet for a long time. They haven't necessarily wanted to invest the time in gathering things like serial numbers, attaching barcodes, figuring out who's using the item so that they can trace back the cost later when it gets lost. They haven't done that because their spreadsheet hasn't been worth the effort. In a sense, the data might get lost even though they put a spreadsheet system in place. What we see is a general improvement over time when we put this solution in place because the system's robust. The data is forced in, the users have to enter mandatory data. We can't just delete data, for example, or lose it accidentally. So there's a general improvement over time when clients introduce fixed asset accounting, and of course that all adds up to a better outcome at accounting year end.